Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some bulletin board hero stocks. And I'm starting off with Black Mountain Resources, where you can see that there have been positive developments over the last couple of sessions. What we can see here is an overall falling wedge bullish formation since August, with the break of the resistance line of the wedge around the 2p mark seen over the start of this week. This should deliver a reasonably strong rebound for the stock, at least back towards the former November, post-November support zone around 4p, and perhaps as high as the 200-day moving average at 5p. We're also backed in terms of momentum by the way that there's been a multiple rebounds off an October falling RSI support line, and also the way that this RSI went right down towards the sub 10 out of 100 zone, which implies a very oversold situation, and now we've seen the coiled spring effect in terms of the momentum that we've seen in the squeeze higher. So a strong rebound here for the stock. If you're more cautious on the situation and not quite sure whether the big turnaround has come here, especially after the full storms that we've seen earlier in the year in February, and also obviously on the way down in August, perhaps an end of day close above the 50-day moving average of 2.81p may be a decent trigger to go long, or the RSI getting above the neutral 50 level. It's now at 48, sorry. So basically, we look like we made the break above 2p, heading towards 4 or 5p in terms of the wedge break, but as I said, some people may want to wait a little bit longer. One of the best recoveries in recent days has been rare earth minerals. I flagged this on Twitter in terms of the initial break of the 200-day moving average at 0.6p. That occurred at the end of last week, and as most TA fans will know, the 200-day moving average is a key dividing line between bullish and bearish scenarios in a market. What was good here is that all along the 200-day line has been rising, so really you would have expected that feature to drag the price up after the probe below 0.5p earlier this year. So message at the moment, we've seen an unfilled gap to the upside so far for Wednesday's session. The stop loss on the bull argument 0.69, which is the top of the gap, and at the moment I'm looking for a rather ambitious target here, the top of a September rising trend channel resistance line from that month going up to 1.5p. So 0.69p the notional technical stop loss, and 1.5p the target over the next possibly 4 to 6 weeks, maybe the end of June, something like that would be the target on that. Obviously, what everybody's hoping for is a repeat of the August spike, which saw the shares up to 2.5p. Finishing up with another favourite at the moment as far as retail investors are concerned, and it's Tower Resources. Here what you can see is that we had the big spike in the autumn. We had a follow-through or follow-on of that spike to start this year, but the consolidation since March has seen the 200-day moving average break, and also a test for support at December trend line running towards the 2p level. Hopefully that process of consolidation is over. We've seen an extended RSI support line and a rebound off that over the past week or so. And really all we need here probably is an end of day close back above the 200-day moving average around the 3.3p mark to act as sort of implied confirmation on a recovery. But aggressive bulls or fans of the stock would probably be buying on any weakness towards the 2.5p zone, and assuming that we'll get a partial or even full retest of the best levels of the year to date towards 6 and 7p. As I said, probably if you're cautious, you wait for the 200-day moving average to break, but it does look as though the initial rebound here has come through. That's it from me. More updates on Spreadbet Magazine.